Markets almost always go up in the presidential cycle last year. Very simply, more cowbell.
Yeah.
Is they want to give out money to everybody who can vote. So they have you noticed how many of these coincide with recessions? Almost all of these people come in, the 4-year cycle is all the kind of same bloody thing. And the stimulus always comes at this point. So 2024 should be a lot of stimulus. Then the new government comes in, they produce stimulus. And those seem to be the two big stimulus years.
Real Vision founder and renowned macro analyst, Raoul Pal, has long discussed the optimal conditions for the upcoming crypto bull market. While many cryptocurrency investors were distressed by the rapid rate hikes announced by the U.S. Federal Reserve earlier this year, Pal remained fixated on what he calls the endgame. According to the former Goldman Sachs executive, this endgame occurs when the Fed discloses its true intentions for the economy, involving another round of monetary easing to counterbalance the government's escalating interest expenses. Pal contends that the seemingly delayed response to inflation, leading to belated and aggressive rate hikes, was a deliberate strategy to weaken the economy, fostering public appreciation for further monetary debasement. Pal frequently emphasizes the significance of 4-year economic cycles, asserting their profound influence on various interconnected cycles, including business cycles, election cycles, and crypto cycles. According to Pal, these cycles exhibit a greater correlation than commonly acknowledged. The intense correlation between the first two results in a trough right before an election year, necessitating additional monetary debasement during and after the election year. This pattern is succeeded by a less natural contraction period, setting the stage for the subsequent election year. Pal and other experts have theorized that Satoshi Nakamoto, the pseudonymous creator of Bitcoin, strategically aligned Bitcoin having events every 4 years to coincide with stimulus years marked by substantial liquidity injections from the Federal Reserve. Pal anticipates a similar scenario in 2024 for the cryptocurrency industry, an influx of liquidity that would rapidly drive up prices and heighten institutional investor interest.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I mean, I wrote this whole piece on this, which is called the Everything Code, which was the idea is that because there's so much debt that needs to get refinanced every 3 to 5 years, we get this 4-year cycle. The reason being is everybody reset interest rates at 0 in 2009, and we've been following this 4-year cycle ever since. The whole economy's following it. It happens to be the halving cycle as well. It's all the same thing. And so what I discovered, and I think I was the only person to do this, was I found out that the Fed balance sheet basically is a 3.5-year lag of the interest payments that are due from the previous cycle. Now, if you think about the previous cycle, well, what was that? The pandemic. There was I think technically it would be called a shit ton of issuance that happened then.
Slightly.
and so that needs to get monetized, right? And we're seeing, this is early stage, but we've got like 12 trillion of this stuff to roll. Plus the new issuance. There's no way. It can't happen. So either the economy goes down the toilet. My view is the reason the Fed are so slow is because they want inflation to undershoot to give them the cover to refinance the debt. If not, they'll do what the Japanese are doing, which is yield curve control, which is buying all bonds at a fixed price. So let's say they say 5%, we'll buy any bond you want to sell us. That is still more cowbell, more stimulus that comes into the system. There is no way of managing an economy that grows this slowly with this much debt. If you had a faster growing economy, it'll be fine. But let's say on average, to make the maths easy, let's say the economy grows at 1.5%. The trend rate of economic growth is about 1.7%. The US government is about 120% of GDP in debt. And interest rates, if they're above 1.5%, means all the economic activity just goes to pay the interest on the US government debt. Problem is the private sector, they're over 100% of GDP in debt. So who pays for that? So what's happening is the Fed are monetizing all of the government debt 4 years later or 3.5 years later. And the private sector does its own thing. But there's just not enough GDP growth. And that's the problem. That's what we're seeing in the market. That's what's going on here. So stimulus is the only way.
But everyone says, who's going to buy all these bonds? It's the Fed.
Yeah. And they'll also change the rules to force the banks, which they did once with Basel III and all of that. They changed it so the banks bought the bonds. When there's too much there, they'll force the pension system, which Europeans did, and the Brits did, they forced the pension system to hold more bonds than equities, to say, we've got this aging population, you need to be more risk adverse, we'll change the pension risk rules. What it means is you're buying the bonds now. What's going on here that people don't realize is this, governments are a function of the money that we put into the government, taxes and other stuff. So we don't have enough taxes because the economy is too slow to pay the interest on the debt, blah, 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 blah. So what you do is debase the currency and mutualize the debt across it, the losses across everybody.
Socialize.
And the only people, to socialize the losses. And the only people who manage to offset it are the ones who can buy scarcer assets. And the scarcer assets, so if you divide the S&P 500 by the Fed balance sheet, it's pretty much been flat since 2008. Gold, flat. Real estate, flat. There's only two assets that have actually outperformed the balance sheet, which are crypto and technology,
right?
Because they're both in exponential growth phases. So it's actually not that complicated a world. We just make it complicated on Twitter.
According to experts, the risks associated with currency debasement far exceed any short-term benefits it may offer. Unfortunately, the fate of every fiat debt-based system appears to be rapid debasement leading to an eventual collapse. Even if a new fiat currency were introduced today, its custodians would likely fall into the same debt trap, resorting to excessive printing until the currency becomes worthless. This inevitability underscores the importance of cryptocurrencies like Bitcoin, designed with a fixed supply to shield investors from the inherent weaknesses of fiat currencies, particularly exemplified by the US dollar. Renowned analyst Pal highlights that cryptocurrencies, especially Bitcoin, and technology stocks stand out as the only assets that have consistently outperformed the Federal Reserve's balance sheet since the initiation of quantitative easing in 2009. This significance stems from the direct correlation between the Fed's balance sheet and monetary debasement. In Pal's interview, he delves deeper into discussions about Bitcoin, BlackRock ETF, and Larry Fink's observation regarding the flight to quality in cryptocurrencies.
As you know, if you zoom out and put it on a log chart, it is, right? It does trend perfectly. It's just that the cycles within that trend, when you don't put them on a log chart, look horrific, and most people don't have the stomach for it. You and I have been around this long enough to realize the pain is part of the risk is part of the reward. You have to go through that to have an asset that goes up 20x, each cycle. So I think it's been decoupled for a while, as you say. It feels that new capital's coming into the space because it's moving out of the risk curve. So we saw Bitcoin going up first part of what I call crypto spring. So all year it was Bitcoin, and that was driven by, I think, just alts bleeding and that washing machine. But what we're starting to see is the movement towards the ETF, and that gets front running of capital from other people as well, hedge funds and others. And then eventually we got the news today that BlackRock has probably started to buy some. Who knows how much that is, but let's call it a couple $100 million. Either way. But so the way to think about the ETF, I think it's really useful. Here's the crypto economy, and it has been starved of new capital recently. And the ETF is a trade deal between TradFi, the TradFi economy, and this new economy. So we've just started a trade deal. Doesn't mean we're going to get the trade, but it's looking like we'll start to get foreign direct investment into the crypto economy. What happens then is how I think about this. My mental model is, okay, so the money goes into Bitcoin first, but everybody who's been in this market has been front running it by owning Bitcoin. So then the next thing they'll go is, well, they're going to do the ETH ETF next. It'll go to the ETH ETF, that will run. And then meanwhile, we've got other stories of things that are getting traction, Solana, Chainlink, others that are starting to rise as the capital's coming into the space and people are placing risk bets in things that they think might work in the cycle. It's really interesting. He won't say these things. He's not like Paul Tudor Jones or a hedge fund manager who can pretty much say what he wants. He controls one of the largest financial institutions on earth. A flight to quality tells you that you need one. I think it's the banking issue is the problem. Because, everybody saw, Bitcoin really started taking off when the banks were struggling. I saw this firsthand in Europe back in 2012 and 13 with Cyprus. Bitcoin exploded because people understood you couldn't keep your money in the bank. And that's when I first got into the whole space. And it's happening in the US again. And people are like, oh, I get it now. But yes, it's a really big statement for Larry Fink to say that. Yeah, you and I can say it all day, it makes no difference. But him, yeah, that's a deal. That's a big deal.
As per recent filings with the U.S. Securities and Exchange Commission, BlackRock has initiated the seeding process for its spot Bitcoin exchange-traded fund in anticipation of approval. This indicates that over the past few days, BlackRock has been acquiring significant quantities of Bitcoin to form creation units for its ETF. Insider sources suggest that when the ETF approval is officially announced, the Bitcoin accumulated by BlackRock will be exchanged for ETF shares. The current developments mark just the beginning of a series of events expected for Bitcoin and potentially Ethereum, particularly if Ethereum futures ETFs receive approval, thereby influencing the broader cryptocurrency industry. Share your thoughts on Raoul Pal's predictions and his outlook for the cryptocurrency industry in 2024 by posting your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.